We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. I'm Gabe, here with Dane and Trevor.
Merry Christmas.
The boys. Merry Christmas. I think this one will come out after Christmas. So happy New Year.
You should have seen, we went to Amadeus, or what is it?
So fun. Yeah, it's Amadeus, the restaurant downtown.
We went to Amadeus wearing elf suits for dinner.
I bought Trevor and I onesies for Christmas.
Oh my gosh.
Trevor put it on, and then we were just wearing it at home. And then Trevor puts his jacket on and his shoes on, like while we were getting ready.
And my cowboy hat.
And he was like, "I'm ready."
What's in your pocket, Trevor? It looks like you got a concealed carry there.
Yeah, I brought my AK.
Is that an AK in your pocket, or are you just happy to see me?
It's a compliment.
Wow. Were people like looking at you funny?
We brought so much joy to so many people.
I think so. It was also shocking the number of other people that were dressed up, not in the restaurant, but walking by the restaurant, so that every time Santa and all his elves walked by, it happened like 3 times. We were waving outside.
Have you seen the movie Elf?
No. Yes.
What?
A long time ago. I don't remember much of it. I like Will Ferrell, but all right. Let's dive into a recap.
Recap of Ryan Gibson.
Yeah,
boy, that was an amazing episode, by the way. I'm all fired up.
Yeah,
I'm kind of a little worn out at the same time. Like my brain is going in a million different directions.
I need to process, but we're going to process right now.
Yeah. So the goal of the podcast was to get to talk to people like that. So
yeah. I hope everybody enjoyed it, because I did.
Yeah.
That was selfishly, I thought that was amazing.
So one thing that I thought was interesting, he talked about wanting to be able to hold the deals at the end rather than go through the syndication cycle, which is something we want to do. And maybe we should think about...
Find a way to convert so that your investors get their 3 to 5 year hold, but then there's a way to keep the asset after.
Yeah, but it's finding the right investors who want that, because there's a lot of investors who just want their check out, move on to the next thing, but the people who really want like real estate for the building wealth and real estate and the tax-free cash and everything.
But can't you just get to the end of a business plan and go who wants to stay in and who doesn't, and we just find a way to stay in the deal?
Yeah, but I think it's a lot of the front-end work of like, you can find more investors if you niche down your marketing probably to that too. Like, because now you differentiate yourself from the other syndications, because most syndications go 5 years sell.
Yeah, what we found with the SMI Legacy Fund, when we first went out to market, we said this is a 20-year commitment. And we found that a lot of people were just like, yeah, I might want to stay in 20, but I want the option to be able to get out. And so we pivoted to where there were redemption rights after 5. And I think that's a great way to do it, because then people have a chance to get out if they need the money, but you might get to 5 and they go, I want some of the money, none of the money, I'll stay in longer.
It's the pitch of the refi, though, on the business plan, rather.
To give them their cash back and they get to stay in the deal.
Yeah, because then that's where your true wealth...
The problem with that is then you have no round trips to advertise, because then you get new investors and go, well, how many exits do you have? And if you don't have any exits, then it's harder to raise new capital.
So I think that you can still pitch a project that goes full cycle, certainly if you're doing ground up. And then heavy value adds the same story, where you're saying, hey, here's how we model all of our projects. Every deal that we do is a 5-year deal. And then even at the 5-year mark, when you're going back to the investors and you're saying, hey, do you want to stay in the deal? You're not just saying, like, do you want to stay in the deal and see what happens? You're saying, do you want to stay in the deal? These are our projected returns on the deal. And this is your upside, because you don't have to go and pay tax on the money that you're getting back right now. And so every time that you go full cycle on a deal, you can say, hey, we did 5 years. And then it's almost like you sold, in a sense.
You returned X amount of capital.
Even if, but not even from the return lens, it's like, this is what we refied at. And so this was their total return on capital over that 5-year period. And you're just pitching, hey, this was a ground up deal. This is what we put in on the front end. This is the equity that we had 5 years later and our cash flow. This was, investors' return over that period. and that's how you're pitching the deal. So even though you stayed in it, it's like, okay, we could have sold at X amount, but instead we refied at this value.
Yeah.
Right?
To Ryan's point, he said, get to know your investor really well. Everybody wants something different. And so trying to narrow that down to finding what it is that's important to them. Some investors will want to stay in a deal longer, and some of them will want to take their chips off the table and roll it into something else.
But our goal is to hold real estate for long periods of time. So like, I think finding investors that match that, and then you can find them easier with your marketing.
Yeah, it is a little bit of a competing mission, because the syndication model is to provide a return in typically the 3 to 5, 7 year period. So now you run into that issue. Like, if we're just going to go buy and hold forever, we got to kind of do that without investors, or do it with a couple partners that are on board for that.
You're utilizing refinances though at that point, because then those people get to experience like why you own real estate of that tax-free money.
You got your money back, you still own the deal.
Yeah, which is the best part about real estate. So like, I think you could almost sell that easier to people, because there's more upside to a deal than you just get your money and pay tax.
Well, your business plan could always say, we're going to get to the end of a cycle and we may sell depending on where the market's at, or we may just refinance and pull our capital back out and just keep holding it.
Yeah.
Keep pulling it out. I mean, that's what Paul says when I mentioned to him that we were selling a project. We have a project we bought recently that you guys have decided you wanted to sell. I explained that to him, that we went under contract on it. And he goes, oh, these guys don't understand the vision. And I'm like, well, they do understand the vision. However, we have an investor in that deal.
Yeah.
And the investor would really like us to exit that deal. And just like Ryan talked about, he's like, you take on one partner in a deal or one big investor in a deal, and now they start to steer the ship a little bit. We may have made a different decision. I don't think we probably would have on that one, but
part of that is to do more deals with that capital though, and like run the business. So as a part of that decision, so it's a little different.
Yeah, so now you're a little bit more like Logan, where you're becoming an equity trader, where, everybody says hang on to the real estate as long as you can, but if you can upgrade your portfolio as you go, I would much rather, once I get to 100 unit properties, I'll hold those for 40 years, but a 10-plex might need to get traded up so that we can get to a 100 unit complex.
Yeah. And so another takeaway I had, something you tell me, action is the highest form of intelligence. So what he described of what he does is what we're doing, but he's just doing so much more volume in his actions. Like, he's taking way more action than we're taking.
Well, this is the guy that's got his calendar blocked out every 20 minutes all day long from 4 a.m. till, I mean, honestly, for me, that's not the lifestyle I want to live. So I don't want to block my time like that. Like, I mean, I think if you're just looking to be the most highly productive human being on the planet, that works. For me, that's just not making friends and having fun. It's not the end game for me to be the most.
That's not your role. That's our role.
I think Trevor could live that life.
There's an important clarification. One is that he's been doing it for 12 years.
And he's only 41. He's got a lot of energy. Yeah. I'm 50. I still have a lot of energy, but I look at that and I'm just like, I'm not going to get to the end of my life and just go like, oh my gosh, I blocked out my calendar every 15 minutes. Yeah. I mean, I appreciate it. I appreciate the hustle. I look up to it. I mean, I think, I work a lot, but I think I get more done when I don't work as hard, to be honest.
Well, yeah, you doing work is delegating the work and thinking of the work that needs to be done is higher and better use.
Yeah, I loved he says, I got 175 people. I got 58 people overseas. It's like, well, what do they do? Well, here's the broad spectrum of what they do, but I don't know in the weeds exactly. I think we just hired somebody who does this or does that. Like, he's not at the ground floor managing every little detail. But
you said, what do they do? And he said, everything.
Everything.
That was his response. Yeah. And I think again, the 2 points is that, one, he built that over 12 years, right? Like, his calendar wasn't like that 10 years ago or 8 years ago, right? It's probably been that way for 6 years.
Well, he says he's an 80 to 90 an hour work week guy.
Yeah, but he was still flying. He flew until 20. I mean, he was a commercial pilot until 2020.
That's a really big takeaway, to be honest, because so many people are out there going, I don't know how to start doing something like this because I need the safety and security of my W-2.
Yeah.
And I had a lunch meeting with my cousin the other day, and I was telling him, like I tell everybody, he needs to get some real estate. And he's like, well, I just don't know when to do that or how to do that or whatever. And then I asked him what his schedule was, and he explained it to me. I'm like, dude, you've got like 50 hours a week you could put in. You could work a full-time job doing real estate and do your W-2 and make plenty of money to support your family.
Yeah.
But everybody wants to go home, sit on the couch, or go play or do whatever, which is fine. That's his life. But in the end, if we don't own real estate, I don't know how you're going to have any freedom.
Yeah, I mean, I think that he's a very special type of person, which is the type of person that legitimately wants to work 80 hours a week. And he pointed that out in his presentation that he gave last year at WARI, where he was just like, hey, heads up, most of you guys aren't like me. Mm-hmm. And it's not a bad thing, right? I didn't just wake up one day and decide, like, instead of working 20 hours a week, I'm going to work 80, right? He pointed out, like, no, I've been doing this my whole life. Yeah. Like, this is just how I'm wired.
He's hardwired.
Yeah. He was like, and it's honestly, it's not going to make most of you guys happier. This is what makes me happy. I enjoy doing this thing, right? Like, I have a family that I love a lot, but I spend a lot of my time working.
Reminds me of Mark Gallegos a little bit.
Mark's very.
I told Mark, I said, why don't you have some fun? He goes, this is what I do for fun. I work.
Yeah.
Okay. I'm the same way in some ways.
Yeah, but what he was doing was not outside the box or that complicated. Like, even when we were asking him on the deal structures, right? It's the same target, a little different, but similar targets to what we're doing now. It's not like there's a secret answer to doing this. It's just taking the action steps over an extended period.
One of my takeaways from Ryan was, if there was one word I could put on it, his operation would be precision. Like, he was all about being super, super precise about how they communicate with their investors, how they define their buy box, how they define their markets, how they define their culture, their mission, their vision. Like, they've really been thoughtful about how they built that company. There was nothing they were doing that was, in my opinion, there was nothing earth-shattering about the process. It was all very simple. Mm-hmm. They were going to figure out what they wanted to buy. They were going to go buy it. They were going to raise money to do it. It's what everybody's doing. But they actually know what they're trying to accomplish with precision.
Yeah.
And it makes, to an investor, I could see why that would be very, very appealing. Because if I'm going to write a check for $1 million and put it into a deal, am I going to put it with a sponsor who doesn't talk to their investors, who doesn't really know where they're going? Or I'm going to go with somebody like Ryan, where we know exactly what we're trying to accomplish, and here's how we're going to do it. Join us.
Yeah. No, and to that point too, I guess he was very, very precise, which means that on the front end, he moved pretty slow. Not like, not in like to discredit him in terms of how much he was working, obviously, but in terms of like how quickly he was actually acquiring properties. They didn't really start scaling until 2019.
Well, even now, he says, I'm comfortable at this range. I want to buy $250 million worth a year, whatever the number is. Mm-hmm. And he didn't feel comfortable going bigger. And maybe in a few years, he'll say, I was ready to go to $1 billion a year, whatever the case may be. But he's growing at a sustainable pace that feels comfortable for their team.
Yeah. And I think he's always done that, right? And that's why it took him 5 years before he was like, all right, we have the infrastructure now. We have enough cash flow coming in from the deals that we currently have, from the operating companies that we have, to make it make sense to scale up to the level that obviously now they've scaled up to.
Who knows policy and procedure better than a pilot? I mean, you have 200 souls on a metal bird flying through the air. Like, these guys are, you can't just, not anybody can be a pilot.
Yeah. And
fly a plane like the planes that he's flying.
Yeah.
It takes a very, a very mechanical, methodical, thoughtful person to fly an airplane like that.
No question.
So to me, he takes some of that mindset and does it in business.
So one of the other takeaways you had was the small versus big checks, and how he he's still raising in small check sizes, where we're thinking you got to keep increasing that check size.
Hey guys, Gabe here. Have you seen the exciting new projects we have going on at Stack Asset Group? If you're interested in investing with us, click the link in the description below.
Yeah, I mean, I think to that point, you got to decide what you want to turn the team into. Frankly, I mean, he's got 175 people that are Spartan employees, and so if we decide that we want to have 100+ employees, then that's a route that you can probably go. If you don't want to have 8 people that are directly responsible for fundraising alone, right? I mean, we look at companies that are like the Brinkman types that are, really big syndicators, relatively speaking, but they just have really big investors, and so you can have 2 people on the investment team, right? And so your whole team's only 20 people. I mean, he doesn't have a very big team for how much he owns.
But they run into the same problem we all do. They take on an investor that's too big, and then that investor tells them, don't really like that market, don't really like that deal, and they start to steer the ship. So that Ryan's comment to that was, well, that's no fun. I want to go do the deals I want to do.
So what is your thought on that? Because we're thinking about doing like programmatic JV and trying to get bigger check sizes versus that model of you still keep syndicating the deals.
I don't know. I mean, I think we still have a little ways to go before we feel it out. We're still in the infancy stage of our company. I think we've done a really good job at defining our buy box and finding our lane and staying in it. And there are advantages and disadvantages to every asset type. I just feel like we know how to find deals. We know how to build deals. We know how to win deals. We have the broker network. We have all of the ingredients to bake that cake. And so then the question just becomes, what is our mission and our vision? And we just have to hone in, every quarter even tighter and tighter into what that means. To do bigger deals. I think that's the ultimate goal for all of us, is we all want to do bigger deals. But I think that this downturn, this recessionary period we've been in real estate for the last 3 or 4 years has been a real wake-up call to look at some of the big dogs that are out there that had the opportunity to go from a small shop to becoming institutional sized, and they did it right in 21, 22, 23. And now they're feeling the pain of what it meant to move into that level during a period where we went into a downturn. So I feel blessed that we're going to move institutional after that period and not right before that period, because I think the timing of it, because of valuations spiking so quickly, it opened the door for those operators to go much, much bigger during a time where you can get yourself in a lot of trouble. So I think that's a shot across the bow for us to make sure we don't get too big for our britches and just go big because we can, but to be thoughtful about it. Like, I think Ryan could do $1 billion this year if he wanted, but he's like, I feel comfortable at $250 million. Okay. That's a really big number to us, but in a few years that won't feel like a big number to us.
Mm-hmm. I think we do need a little more clarity and focus, even though we've been developing that, but like how he's able to describe it just so quickly, and it is very clear.
They've been honing in on it for a decade.
Yeah. But I would like to not hone in on it for a decade and figure out at our quarterly meeting. Hey, did you like that they run on EOS?
Yeah. That's great. I picked up on that.
Okay. Yeah. Because you shit on my EOS at the start.
I don't.
Not anymore.
I just don't want any rocks to carry around.
You did when it was confusing. Before we explained it well.
One of the takeaways I had was when he talked about, he's got an investor that's coming in with $100,000, but he's signing on a $5 million loan. Yeah. When you talk about the risk that you're taking, that's something that I'm not sure that we have fully thought through in terms of, like, we're taking on a huge amount of risk
and
to go
communicating that to the investors.
Yeah, like not only are we putting our own money into these deals, but we're signing our name with personal guarantees on a lot of this. I mean, at some point we'll probably get to non-recourse debt, but in the meantime, like, we're literally taking on millions and millions of dollars worth of exposure. So it's pretty clear that we're bought into these deals, and we want them to succeed to a high multiple over where the investor wants to see it succeed, because we have a ton of skin in the game. I don't know. I thought that was a great takeaway to think about. Just because we didn't write a check for $5 million, if you're borrowing $5 million, you're putting $5 million in that deal.
Yeah, of your net worth on the line.
That's right.
Yeah.
So from seeing what he did, what do you think we can take away and implement from?
Let's let Dane tell us that. This was a master class for Dane, I think.
Yeah, no question. I mean, the biggest thing is just is creating the precision within communication to investors and having much more clear systems on the way that you're communicating with people, whose responsibility it is to communicate with people. Obviously, it's mine right now, and I'm communicating to all our investors. The side of it that was relieving almost to hear was how much support he had on the investor front, where it's like he's going to the big meetings. Like that's his goal, is to be in the big meetings. But outside of that, he just has salesmen that are running all of it, and then tech support, quote unquote, that are that are helping people get their investment funded. Whereas like right now I'm fielding all of that stuff. And so I spent a lot of hours just talking to people about literally how to give us money. Because the platform's easy to use compared to what it used to be, I'm sure, but it's still, to somebody who hasn't used it yet, it's confusing. And a lot of our investors are just people within our network who have never used the platforms that we're on. And so just having better SOPs, which we're working on to build that stuff out, and whose responsibility it is to fix all that. And then we're learning, how to use the platform better and better every day too, which is Invest Next. That's where we take funds.
What's an SOP?
A standard operating procedure, which is just when this question comes through, how do we answer it?
I feel like we're in the military. We have.
You have to be. It's almost like he was with the pilot side of it, where it's like this is how we operate on everything. I'm sure there's very, very little confusion about whose job is what in what scenario.
Do you check the flaps on the wing every time you fly, or just every once in a while?
Yeah, seriously.
Yeah, I think the big thing there too is building out the team so that stuff, everyone knows whose responsibility is what. Because right now we're a small team, so it crosses over so much. So we need to build out better systems and responsibilities for all of the people we have currently and who we need to do those things. Which we saw as we've been trying to hire. We're like, oh, we may not actually need this person that we thought to hire because these are the actual tasks that need to be done and whatnot.
Yeah. And I had to build out a list of like all the stuff that would actually make sense for one person to do. And then I'm looking at the list of things that I'm making and it's like, that's not that guy's job, right? I made a list of like 60 things that were things that, I have to do. And then I have to whittle down what actually makes sense for a financial analyst to do, or somebody who's in investor relations. And it's like, okay, actually that task is probably, Devin's, or that task is probably Ryan's, or that, it's this list of things that it's like, no, that wouldn't be that hire's job. And so just dialing in what your job descriptions are and like, hey, here's your exact role. Here's what I need you to think about all day long. You actually don't have to think about anything
And
else.
It's having a better org chart and then seeing where you can cross the people over on the responsibilities of the org chart. So when I went to the Vistage thing, that was a big thing they talked about, is how can you have this org chart and you can't hire more people necessarily right now, or you're not as efficient as you need to be. So how do you cross over what employees are doing? And can your asset manager do this financial analyst thing and whatnot?
Wearing multiple hats.
But that needs to be defined better, not just like
delegated on a day-to-day basis.
One of the things I've noticed about big syndicators is oftentimes a lot of their leadership team comes out of bigger shops. They come out of institutional companies. One of the, I would say, deficiencies that we have in our team is we don't have anybody who's come in from a large shop that can teach us some of the things that they were just like, well, where's the guy to do that? Where's the gal to do this? Like, well, over here we had that. We're running a little bit blind, almost like reinventing the wheel a little bit. We're all smart. We've done good in real estate and we've worked our way up, but we don't have anybody on the team.
It's building a business.
Yeah, I think one of your hires needs to be an operations person that's come out of a big shop that just goes like, you guys are idiots. Like you don't need this, and that. You need this person to do
but
these
we can pay for
things.
Consulting to get that.
You could, sure.
I think it helps when it's internal.
I think you need somebody on the team that comes. Like,
hey, you run some pretty big businesses. Could you tell us?
They're not as big as you think they are. But the first syndication I ever joined was a family group out of LA, and the son and daughter now run that team, and I'm still partners with them. But one of them came out of True America. He was the VP of acquisitions for, I think, one of the largest apartment holders in America, and the daughter, she came out of one of the largest affordable housing providers in America, and so they came with great education, went and had great experience, and then the whole point of it was for them to learn this institutional structure so that they could then run the family office. And there were definitely benefits and downsides of that, because jumping into a small operation like ours, they wanted to do some things that really didn't make a whole lot of sense. When you're buying a 28 unit complex, you don't do the same thing as when you're buying a 280 unit complex.
Yeah.
So there were some learning curves that came along with that. But the great thing is they already had your SOPs. They had your procedures. They knew how a big company operated. And so they knew what was missing on the team and where to hire. And that team still runs with half a dozen people. It's not a huge company. So I think that's the other thing is you have to decide what is it you're really trying to build out and how many people do you need and what are we trying to accomplish. And that comes with just knowing what your guiding light is and where we're going.
There's a lot of ways to do it too, is as you start looking at.
And there's no right way. There's no right way or wrong way. I mean, we want to be successful, but what is it we're actually trying to accomplish? I think that's really important.
Can you describe what we're trying to accomplish?
No, that's your job. You're our visionary.
So, but you should, like he said right there, if you go to any employee, they can tell us.
I know we're trying to stack performing assets. I know that our lane is in multifamily. I know our competitive advantage is being able to build ground up. We can do heavy value add. We can manage. We can asset manage. We're pretty good at marketing. Like there's a lot of things, a lot of really good things that we know how to do. But where do we take it all? Ultimately, you're the one, Trevor, who's said that we're going to go out and build a $12 billion portfolio. That's beyond my imagination. I can't think that big. So we rely on you to think about those things. How we're going to get there, I don't know. I like the 3-year plan. I got to say, I'm not one for, 1 year, 5 year, 10-year vision and all that stuff. But I do like the idea of where we're going to go in 3 years. It just seems like you can take it off in a chunk.
So because he runs EOS, and he talked about this at Wari, was that they had the 1-3-10. It was a 1 year
1-3-5-10 or something like that.
1 year plan, 3 year like vision, 10 year like mission or something. I don't know. I can't remember exactly what it was, but he was like, 10 years is useless.
It is.
he was like, we quit doing that like 6 years ago, 7 years ago. It was part of EOS, and they actually removed it. So he's like friends with the guy who wrote that book. Mm-hmm. And he was like, yeah, we don't use that anymore. It's just too far out. Mm-hmm. It's like one biggest thing, you can't get most people excited about that. So even if you internally might be able to be like, 10 years from now, this is my like plan for my life, which you're probably wrong, but you can still be motivated by it. He was like, most people aren't motivated by that. It's way too far
away.
They can't think about it. And so that's why he maxed it at 3 years. And they still have 1, 3, and then like their quarterly, and then their monthly meetings, and then their weekly meetings, like he was talking about. But he was like, the furthest out that we go is 3 years, because it just doesn't make sense to go beyond that.
So we're coming up on the quarter right now. What do you think one of our main focuses should be going into the new quarter?
I love the idea of taking the investors that we have and doing a better job with communicating to them and making sure that we really knock it out of the park for our current investors. I tend to be more of a relational guy. The transactional stuff, I was talking to Sean with Open Door Capital the other day, and he was talking about, well, I've got this list of 17,000 people and we can reach out. And I'm just like, when you say a number like that, you lose me. Like, I'm all about, let's find one.
Do you think it's valuable for you to meet with our investors? Because that's like your favorite thing is talking about real estate to people. And now you're Xing out all the meetings you were doing prior. That is that conversation.
Yeah, I would love to be part of the investor relations team. I love people. So whatever you can do to put me in a room with people, that's what I prefer. In a smaller group, the better.
Yeah. I think it makes a ton of sense for you to be I don't want to say the issue. It makes a ton of sense for you to be investor relations on the front end, for sure, in the first meeting with people, just to get them excited about investing, not only in real estate, but investing with us. So both of those things. I think it's hard to have you do that past that time period.
Well, people want to know how's the deal going.
You don't know anything about the deals.
They're like, how's this deal going? I go, I don't know. What deal is that?
Yeah, I never seen that one before. I know that I signed on the debt for it, but no. I think that you have offloaded so much of the nitty gritty to me, Mark, and Trevor, which is really, really good because it's freed you up to do all the other stuff that you need to be doing. But that's why like the weekly conversations or monthly conversations with investors just won't make sense for the most part, because I had 3 investors reach out to me today with very specific and very different questions about deals that they're involved in. Yeah. Right. And I have to know all the answers to those questions, and then I have to be on a 30-minute phone call with them, because that's my job. And I also want to provide that for them, right? I never want them to like reach out and for me to be like, yeah, can you book a time on my calendar sometime next week? It's like, well, it looks like that's what I'm doing today. Right. And I have no control over that. But I also and that's why I have to stay up to date on all of our deals. Cause that's again, like the most important thing is servicing the people that already invest with you, because the people who have invested with us have sent us tons of referrals, right? Like we have 2 investors coming in right now that are just referrals. And so, I didn't have to build that relationship. And actually, neither of them are even from the United States of America originally. So it's like, okay, I never would have met them, right? Like one of them, well, anyways. But moral of the story being, like, I think that we're doing a good job with what we're doing, and we could potentially put ourselves in a pickle if we try to outgrow the state that the place that we're at too quickly.
Yeah.
And so
that was a great takeaway from Ryan. It was what I saw was really thoughtful, sustainable growth.
Totally. Even a guy like that, where it's like his goal for acquisitions this year is lower than our goal allegedly is in 3 years. And so it's like, well, we should probably think about that, right?
Yeah, because we couldn't take care of 2,000 investors today.
No.
We don't have the team for it.
We couldn't come close. Right? We'd have to hire 10 people just to talk to them and to service like that side of the business. That's just that piece, not including like the financial and accounting stuff that we would need that would come along with that, right? And so we would outgrow our accountant if we tried to do that. So we'd have to offload that.
You
and
can hire another, though.
I understand.
There's a lot of people out there, Dan.
No, I'm not disagreeing. I'm just saying, like, a guy who's doing a really, really good job at the thing that we want to do was like, yeah, this is all that I'm going to buy. I think it'd be dumb for me to buy more than that because my team can't handle it. He's got a team of 175 people.
I'm moving to the Philippines.
And he was
you can run our offshore team.
You can be our BPO. But he was like, yeah, my team can't handle over 250 million. And our goal was like 2 billion in 3 years.
I think I think Trevor's job has always been to press us to think bigger and to think beyond what even seems possible, which is what helps us grow. Yeah. At the same time, I think we want to be really responsible about this, because if you do what some other people have done and all they do is just try to grow for the sake of growing, they become too big for their britches.
Yeah, and I think Ryan pointed that out. You don't need a bunch of shitty performing properties to cause headaches. That's not why we won't buy real estate. No. But what I learned this quarter, what I'm going to work on is setting realistic goals with everyone.
Did we talk about that?
Attainable goals.
Yeah, me and Trevor talked about that.
Because Dane says I set unrealistic goals, and then you guys tell me no, and I tell you guys to F off. We're doing it.
I think Trevor needs to have an unrealistic vision that we're all going like, holy crap, we don't know how we're going to do it.
Down into
but Trevor dreams that one way we're going to do it, so somehow we're going to do it. But we got to break that down into a chunk that doesn't scare people. When we did our investor dinner, we all got up and spoke, except for Trevor. And I asked Dane, I said, why aren't we going to let Trevor get up and speak? And he says, well, because Trevor will get up and he'll say something like, we want to buy all the real estate in the entire world. And then everybody's going to go like, oh, these guys are crazy. We
not invest.
I don't think I'm going to invest with these guys. So having somebody that has what seems to be an unrealistic vision, even though it's not, I think we need to have that on the team. But then we also need to be able to break it down into chunks where we can go, okay, in the next 3 years, this is what we're going to do. Here are the assets we're going to buy. Here's the way we want them to perform. Here's the amount of money, not only that we want to make our investors, but like Ryan said, be selfish about it. And how much do we want to make out of the efforts that we're doing? I think that's really important.
Yeah. No, quite. And like to that point, we need somebody who is the gas. Somebody's always going to be the gas and somebody's going to be the brakes in the relationship. I think that you and I are used to being the gas in our relationship.
I'm not the gas pedal anymore. Trevor's the gas pedal.
That's what I was going to say. Yeah. This is the first time. I mean, for the last year and a half, when Trevor and I first started working together, we kind of had realistic goals together where it was like, this is what we both think is reasonable to achieve over a 3-year period, which we actually, our Vesta goals, for the record, which was initially just me and Trevor, and I don't even know what we were doing, frankly, but, we were brokering, buying, and trying to build stuff. And we did end up hitting those goals, and they were pretty reasonable, but we were both kind of like the gas
seemed unreasonable at the time, though.
Oh, it did seem kind of unreasonable, but it didn't seem impossible. Now I think you and I both are just the breaks when part of that is that we have a different role than he does, and so I have to look at it from a feasibility.
Well, I can't have a relationship with 2,000 people. It doesn't work.
I can't. Yeah,
I can reach 2,000 people and I can impact 2,000 people, but I can't have a personal relationship, not the kind I want to have with that many people.
But 6 other of you can, so don't worry about that. But all right, we got to wrap this up because I got to go to yoga class.
I love it. I want to still be the gas pedal, but Trevor can be the nitrous switch.
Yeah, no, I know. I feel bad because I'm so used to being like, we need to do more. And then when I'm with Trevor, I'm like, we need to do a little bit more.
Well, one of the ways,
not that much more.
I think the way we're going to do more is to take care of what we got. We learned how to find deals and win deals. We learned how to finance deals and manage deals. Now we need to really look at how we build the team out so we can take care of ourselves and our investors and our properties and do a really good job of what we have. And I think to Ryan's point, when you do a really good job, you're going to grow organically because you're doing a really good job.
Yeah, I learned what unreasonable scale looks like when I was like 24 or 25.
Yeah.
We don't want to do that.
No, because you didn't have a business around it. No. And you didn't want to do part of what the business was.
Yep.
and so now we've kind of, and we recognized that last quarter or 2 quarters.
All right, we got to go though, actually.
Trevor, you can get out of here. No,
I want to know now that you're doing yoga, can you open your arms yet? We call Trevor T Rever or...
No, that's a bone thing. That's not
So yoga doesn't help your bones? It just helps your muscles?
Yes.
Can you open your arms now? Let me see how far you can open them.
It's the same. It will...
Really?
I think it's opened a little bit further.
I think that he has a fixed mindset instead of a growth mindset.
Dude, all right, I got to go. I'm doing this class.
All right, Deal Junkies. Thanks for listening to us blabber on here. We hope you enjoyed the Ryan Gibson episode. Please share us with one of your friends, and happy holidays. We'll see you next time.